a longtime retail executive telling investors not to bet against consumers this holiday season. Jerry Storch runs Storch Advisors. He's a former CEO at Hudson's Bay and Toys R Us and was vice chairman at Target. Jerry, always great to see you and always great to get your take. In terms of the consumer, it does seem like there are enough stories out there where you can, put together a storyline for whichever way you want the consumer to be, weak, strong, et cetera. In your view, what is the state of the consumer? And is there one story or one stock out there that you think really tells the true story of where the consumer is these days?
Okay, look, the consumer is essentially strong. They have been all year. The last time we had a report, I have it right here, remember the government published reports, the year-over-year sales increase was 5%. That's a very healthy number. And one thing you know about retail is you want to predict the future. Look at what's happening right now. I heard Brian Moynihan the other day on CNBC saying that retail sales of his credit card portfolio are up 6%. A lot of forecasts, NRF, others say 4%. Anything north of 4 is a win. 4, 5, 6, you pick it. I think it's probably, more like 5. I have to pick a number right now. That's a very healthy Christmas. So why is it there are all these stories out there? Well, look, there's certainly difference in performance based upon where you are economically. The stock market is booming. We all know that. That drives sales for wealthier people. So that's going way up. Now, some people say it's a K-shaped economy. I tried drawing it. I don't think it's really a K. It's more like a tree, because what's happening is the wealthy is going way up, and people who are lower income, they're still increasing their purchases. They actually are. They're still growing. So it's like a lower branch. It's not really a K. It's just branches growing at different rates. That's what's going on. We're going to have a fine Christmas. I don't know what's going to happen next year. That's a long way from now. People are going to emerge from Christmas very leveraged up, a lot of debt on the consumer balance sheet, but we'll have to wait and see about that.
Jared, it's Karen. Thanks so much for being on. Following the wealthy consumer, if that's what you wanted to bet on, is having a really strong Christmas, what would be the way you would do it?
The funny thing is we see people trading down into value-based retailing no matter what they earn. So I still have to believe in Walmart. They've been kind of treading water for a while after a big bang start to the year, and they are still capturing massive market share. Whether you're betting on them for a month or a year or 10 years, they're going to keep winning. Another big winner where their stock hasn't done as well lately is Costco. But again, started off strong in the year, hasn't been as strong. But they, again, are capturing massive market share like we've never seen before. And they're a great fundamental retailer. TJX, they hit an all-time high today. So I don't know if you want to buy the stock or not. You got to decide that. But I can tell you, as a retailer, they're doing everything right. And then there's Amazon. The performance of their retail unit now probably is being overshadowed or outweighed by the performance of their computing cloud-based unit, everything going on in AI, et cetera. It's almost like, oh, yeah, they're a little retailer on the side, but they continue to do very well in e-commerce. Those are all big winners, capturing massive market share, while, frankly, most of the others are losing.
All right, Larry, a week from now we get Target. What's up with them? I mean, is there any hope for TGT?
Well, look, it should be a good story. The problem is they're off strategy and they're not executing. Other than that, it's all perfect. And so a long time ago, they made a big mistake. They de-emphasized grocery at a time when grocery has become the all-time traffic driver for their archenemy, Walmart, right? On top of all of that, when you go into the stores, you see lines, you see out of stocks, you see them promoting more when they're supposed to be a value-based retailer. So they got a lot to fix. But they know they have to do it. I saw they said they lowered prices on thousands of items. Good, they have to. They have to emphasize the value part of that expect more, pay less equation if they ever want to fix what's gone wrong there.
All right, I gotta do an on-air mea culpa. So before the show, every time Gerald comes on, I say, Larry Storch, F Troop, Agarn, the whole thing. And then tonight, I actually called him Larry. So I apologize. That's on me.
Not the first time it's happened. Not the first time.
Won't be the last, probably,
well, hopefully the last from me.
I always ask any former retail exec, knowing full well that you might still have your stock in your portfolio still. But at this point, we've had this debate here on the desk, Target versus Walmart, given the valuation difference. What would you prefer? Which stock?
I have to tell you right now, I have to go with Walmart. I hate to say it. It hurts me to say it. Because your company, I still bleed red. Like you do too, probably, but still I do. And, the bottom line is Walmart is performing. They're hitting on all cylinders. Target's still adrift. It's not clear what's going to happen there. I sold the vast majority of my Target stock during the pandemic. I felt like a fool because it shot way up, but it's crashed ever since then. But I bought Microsoft, so I'm pretty happy.
What does Target need to do, Jerry, to win your favor back and the favor of investors?
Again, I have a 10-point plan if they ever want to see it, but they have to fix the strategy. They have to fix grocery. Right now, it's totally backwards. They have a convenience grocery store. Oh my gosh, the whole purpose of putting a grocery store in Target, I was the one who did it. The purpose of putting a grocery store in there is to drive frequency, for people to make it their primary grocery store, to come once a week and then buy the high-margin general merchandise. Instead, they developed a convenience-based grocery store, so they come in once a month for their general merchandise and buy low-margin grocery. It's backwards. The whole strategy is messed up. Then when you look at the rest of it, the lines are too long, they're out of stock, they're not emphasizing value enough. They put junk in the aisles, they have cardboard fixtures, the stores don't look different enough from Walmart. They used to be differentiated entirely. The number one thing Target would always beat Walmart on is appearance of the stores. Not true anymore. Walmart's done a ton of stuff to catch up, while Target seems to have gone a little bit backwards. The first thing you see when you walk into a Target store is the in-store pickup stuff, but it looks like a warehouse instead of a beautiful store. So they have a lot to do to get back to the old days when it really was Target.